Hi, welcome to the Market Alert for Friday, the 26th of February 2016. And starting off in yesterday's 5-minute chart, the market fairly quiet in the pre-market session, just trading in a 100-point range there. And then as we open for the official session, again a 100-point range before the market eventually finds its feet. And again, the upside at the moment, we've got this dead cat bounce in progress. The market continued to be moved higher by the plunge protection team, Federal Reserve. They want this market higher just so that they've got something to lose when eventually the whole lot starts to come cascading down, which it will do. And I still stand by what I say. I think from next month you're going to see all sorts of carnage coming back to this market. I'll explain why in just a moment. So first off, we get the trade at 16:25, 5 minutes before we go into what would be normally the quiet time, but at the moment the market actually trading quite well through this. There we see a 38-point trade as the market trades up to the resistance there at 16,550 as prices struggle with this, as they did earlier on in the session, then came down. The 16,500 crucial, which I've spoken about before. 16,000, 16,500. They want this market higher, and that's where we see prices then come back, retest, staying above the entry price as well, and then moving to the upside. And we see prices then give a second signal just in the latter part of the quiet time. And of course this is when the plunge protection team every afternoon for the last I don't know how many weeks now, they've come into the market and started buying, and you can see there the market moving higher, also trading up. And then once the market drives through the scalp, you can see they're driving then through the 16,600 level and then trailing up, making rising lows. And as you follow these rising lows up, you'll see the market coming back and taking this trade out for a 47-point profit as well. So all in all, a good day yesterday. It helped to pull back some of the losses, if not all, from Thursday when the market was stuck in a sideways range. In the daily chart, you can see the market there breaking through the 16,663 and now continuing to move higher. So let's just put a few more resistance areas on this chart. There you can see 16,757, and all of these lower highs, all of these are areas of potential resistance should the market move higher there. So again, just have a look at the bigger picture so we can see where we are. So we're heading back towards the January highs at the moment. Let's see how the market fares, but at this point it's a dead cat bounce, that's for sure. There's no real buying here. It's the same pattern every afternoon. You see the POMO, as it's called, or the plunge protection, come in and buy this market. News-wise, anyone wants to be concerned about is the Fed are wheeling out a couple of speakers today. 3:15, we've got Powell speaking. It's a medium impact, and I would suspect that this is the same rhetoric, and you're going to see the market making new highs, and then all of the newspapers and the media and the talking heads will be saying that we have a resumption of the bull market, and everything is fine to end the week on, and best week for stock markets since January, all that sort of hyperbole and nonsense. So watch out for that at 3:15, and Brainard speaking at 6:30. And like I say, they're likely to add to the upside momentum that we're seeing this market currently have. In the implied volatility, 1666, and this is what I was talking about at the outset, that we've got this dropping down nicely. Now if we can get back down to these 10% levels, then we are going to see the next major correction in the market. There was a couple of traders being interviewed the other day in a David Stockman interview that I saw on YouTube, and they were talking absolute nonsense. They don't understand implied volatility at all. They were saying that there was a total disconnect between implied volatility and the market having fallen. Well, they're obviously not looking at the right chart. They were saying because the implied volatility is below the blue line that the market can't go down. Well, actually that's how it should be. We want the implied volatility heading towards the 10 levels, because every time it gets down to this level we get a major correction in the market, as you can see from the spike up in the yellow line there. And the only thing that I would agree with is that we do want the blue line below the yellow line, but that doesn't really matter too much because there are a far bigger picture of energy debts with the banks and everything else. At the moment it's the calm before the storm, and the implied volatility is a key indicator in this because you can actually see and gauge precisely what's going on, because as the froth comes out of the market, the lower this goes, the bigger the correction or the next correction that is coming. And that's why I know that from March, if this continues to move higher, it's a dead cat bounce, there's no doubts about it, ready for the next wave to the downside. And here we're just seeing the froth come out of the implied volatility because it can't expand when it has highs in the implied volatility. It moved up from here to here, from around 11 to 22, it's a 100% increase. You can't continue to move lower in the underlying market. It needs to breathe, and that's where we're seeing all of the froth come out now. And the lower this goes, the better. And if we get historic lows on this, then we'll get a massive correction like you saw there in August when the whole lot kicked off. This will be pale into insignificance once we do get rolling in the underlying market to the downside as well. Right, that's it for today. Not much to report news wise, just the usual Trump stuff that's around at the moment. The Shanghai market up there 31 at the moment, so recovering a bit from yesterday's 6% drop there. Again, even that's been ignored now, except for Yellen, of course, who will use it no doubt as an excuse to say that they're not increasing rates because of China. Yet they had a 6% down day yesterday and the Dow went up. So again, it's just hot air from the Fed. Right, that's it. I will see you in Monday's Market Alert. Have a great weekend. As ever, thanks for watching, and see you in the next one.